Hello, everyone, and welcome to today's webinar on trends and strategies for addressing labor shortages and staff retention. Today's webinar is brought to you by the Victorian SME Committee. The committee represents CPA Australia's members that operate in small and medium-sized businesses and provides opportunities to develop awareness, skills, and connections. The role of the committee is to promote and build the CPA Australia brand and provide feedback from that sector to CPA Australia. They engage with members in the SME sector and assist in building relationships with employers. They provide a forum for professional debate and briefings on relevant topics, provide member opinion and views to CPA Australia policy and advocacy team. We have people joining us from all over the country for today's webinar. I would like to take a moment to acknowledge the traditional owners from around Australia and pay my respects to elders past, present, and emerging. I extend this acknowledgement to all Aboriginal and Torres Strait Islander people who may be joining us today. Today, we are very lucky to be joined by Dr. Avnesh Ratnayake, founder and CEO of Energess. Dr. Avi is the founder and CEO of Energess, a leading digital company with products that improve workforce planning and staff retention, as well as emergency risk management and customer experiences. As a futurist and award-winning digital innovator, Dr. Avi advises SMEs, large corporations, healthcare organizations on predicting industry trends and overcoming challenges using data-driven decisions. His latest work includes digital solutions for addressing labor shortages through ROI-driven workforce management strategies and predictive algorithms. Dr. Avi's career began as a medical doctor in the UK and Australia, working across public and private sectors. After an MBA, he ventured into biotech and pharmaceuticals with responsibilities from researching high-profile medicines such as Viagra to chief of staff of industry leader Pfizer Australia. He helped manage products worth over 100 million a year and strategically grew organizations to over $1 billion a year in revenue, prior to founding 3 tech enterprises in subsequent years. Thank you, Avi, for joining us today. I'd like to pass over to yourself now.
Thank you, Mark. Thank you for the kind introduction, and hello everyone from CPA Australia membership, as well as our friends and colleagues from all around the world. My name is Dr. Avi Ratnayake, and I'm really excited to be here today to present this very interesting and exciting talk on behalf of CPA Australia and my organization, Energess, and to particularly help all of you with probably the world's #1 and Australia's #1 business problem, which is addressing labor shortages and particularly around staff retention as well. Now, before I begin, I'd like to also acknowledge the traditional elders, past, present, and emerging, for the land in which we stand, both physically and virtually. I would like to also acknowledge all of you for attending, but particularly expressing and setting aside an hour of your precious time to learn more about how you can actually address the challenges and opportunities with your workforce, with your people, in order to improve your business performance. Because that alone, this time that you're spending, sets you aside from everyone else in the competitive landscape to get ahead of the market. It's also really important at this point to also be clear with you that this is a very content-rich presentation. Okay, the issue around labor shortages, as you can imagine, is so large and complex, and we are also presenting today with representations from various different industries, from SMEs that are small to medium, but also some attendees from large corporations are here. And I want to acknowledge that whilst we are presenting some very general information and cohesive strategies, it's very important for you to pay particular attention in order to identify what I'd like you to do, 1 or 2 key insights or strategies that you can immediately take away and practically apply with your teams straight away. So if you have your phones on and so on, it probably is a good idea to just turn them off or put them on silent so you can absolutely focus on this. You will be getting a lot of the slides afterwards, which is good for you. You don't have to do extensive note taking, but really, really important that you pay attention for the next hour. There will be time for questions, as Mark has already elucidated. So please feel free to put them in the chat box. And in the last 10 minutes, we'll try and cover those questions as much as possible. Now, as I mentioned before, Energess is an organization that has got a history over the last 10 years of implementing digital solutions, helping organizations with data analytics, but particularly around helping with workforce improvement and transformation, customer experience, and operational ROI. So everything we do, everything I share with you today will be around helping your business, your practice, your enterprise actually grow and improve that margin through some of the insights and ideas here. We've worked with organizations, over 120 organizations over 5 countries now. So a lot of our practices are highly translatable, highly relatable, and particularly the eight strategy approach that I'll talk to you today can be applied by any business over this period of time. We've impacted over 8 million of lives through our customers, either directly or indirectly. And I want to acknowledge all the our customers of ours who have attended here, some of whom are CPAs themselves. So I'm really excited to have you here as well. And thank you for the work that you've done in impacting all these lives across many different industries that we've worked in over the years. This covers some of those organizations. I won't spend too long on that, but you can see the breadth and depth of industries that we've worked with over the last few years as well. And that's really where a lot of our intellectual property insights have come from across the varying industries. Now, the key truth of the moment is times have changed. And this has occurred very significantly. If you look at where we've been in the past, if you were an employee, one of your big challenges was finding work, right? And trying to grow your career in that time. But right now, it is an employee market. It's a candidate market because employers are competing or trying to get talent in a very, very difficult environment. And so it's really the business owner, it's really the employer's challenge now to find workers. And that's really the situation that we're in at the moment, which is very, very ironic. But if we look at how did this happen? Now, if we look at 2020, just 2 years ago, COVID year 1, what was actually impacting and the drivers on jobs, on business and the economy? We saw COVID hit and businesses were reporting, up to 66% were reporting a reduction in financial turnover, and similar reductions in customer demands, and the restrictions that were imposed were actually impacting operations in about 48% of businesses. As social distancing sort of practices and policies were applied, about 72% of businesses reported a decrease in revenue, which is significantly impact. But more importantly, for our workforce, we saw 870,000 people lose their jobs. And the border closures impacted staffing numbers, particularly in certain industries such as accommodation and food services, lost about 41% of their staff. Mining lost about a third. Hospitality was significantly impacted to that level as well. And transport and postal and warehousing industries were impacted by about 29%. So various industries were hit very, very significantly due to these particular restrictions in 2020. But if we look at how things have evolved since then, in 2021, sorry, I'm just going to skip ahead here. In 2021, we saw restrictions start to ease. Businesses that were reporting, 72% of businesses were reporting reduced cash flow in 2020 were now easing, improving the cash flow. Only 30% say they had reduced cash flow in 2021. There was similar with the demand for goods and services was starting to improve last year. But what we started to see was that these new entities, quarantine hotels and so on, and other types of organizations had evolved and come into play. But what was really interesting, the performance of one entity, such as a quarantine hotel, would result in an outbreak in an entire state and shut down business operations, could shut down in business operation in the entire state. So the workforce performance of one entity was almost like a nuclear holocaust on the business impact on an entire operation. Never before has our businesses been more interconnected in their performance than we have been in the past. And the pandemic's really revealed some of these impacts in very, very strange ways. But if we look at where we are now in 2022, we do know that there's a significant trends or multiple trends causing acute workforce shortages. About 85% of businesses are reporting shortages, preventing them from operating at full capacity. And some reports say 380,000 fewer people entered the workforce over the last year, which cost the economy about $180 billion in lost revenue. Why did this happen? Well, some of the macro drivers and root causes were obviously we saw a lot of people get sick throughout COVID, but a lot of people also became mentally unwell through the fear of COVID in a sense, where we couldn't actually, or we were prevented from working in normal ways, either coming into the office or working in full capacity for a significant period of time. Some of this still lingers on. The border restrictions, whilst they're easing in Australia, still continue to play a role in countries all around the world, and therefore still restricting movement of certain workforce. And the policies by government to some degree haven't fully alleviated to allow certain workforce segments from coming through. We've all heard about the Great Resignation. I don't want to talk too much more about that, other than saying while some people believe or disbelieve that phenomenon, many are now also describing it as the Great Reevaluation. And that is a significant portion of the workforce made different decisions about where they want to work, how much time they want to put in their workplace. They wanted to reconnect with their purpose and also valued their what we used to call work-life balance and what we're calling well-being now, such that they look for different kinds of job opportunities. So some industries that lost staff before are struggling to get them back to the volume and capacity that they once had. Now, this is at a macro level, but also if we look at the unemployment rates in Australia over the last decade, we are at the lowest unemployment rate in a decade. This is very significant at about 4%, which means it's a very, very tight labor market. But if you particularly look at the trends, as I've just described from 2020 right up to 2022, look at how that's just shooting down. People are getting jobs to a significant degree within the Australian market, but competition is very, very tight. And towards the end of today, I'll actually tell you a bit about what that long-term trend is going to look like as well. So stay tuned for that, because not only that, I'll also be sharing some free resources and tools on how to address some of these strategies towards the end of today's presentation as well. Now, if we look at the organizational changes, the practice drivers, what actually happened for businesses? Well, many actually suffered revenue losses. Some suffered operational disruption and workforce disruption as well. Not only did the shortages cause loss of revenue because you couldn't keep all your services open or running in the way that they used to prior to the pandemic, we know now there's significant talent pools, limitations on talent pools. And even before, where you could actually recruit your way out of the problem, you can't do that now. You can approach recruiters, you can try to get them to recruit the kind of staffing that you want, but not everyone's getting the staffing that they need because the pool just isn't there. At the same time, there is that constraint on profitability. Wages and recruitment costs have risen, and supply chain costs have also risen over the last couple of years, and that hasn't changed too much, such that we're seeing in some industries, such as construction, this profitless boom. So we're seeing that whilst you might get the work and more infrastructure projects, because of that rise in supply chain costs, because of that rise in wages costs, you cannot make a profit from some of those projects. And I'm seeing some organizations turn away work because they can't make a profit from certain projects. Now, in addition, productivity was what we know was impacted by COVID. We're still seeing that significant sick leave and absenteeism occur. And many organizations also have to frequently reforecast and re-roster their staff because the changes in the environment have been so frequent, particularly with all the policy changes around COVID. The way in which we address our staff and bring them in has changed, but also flexible work arrangements have improved significantly to a large degree by many forward-thinking businesses, but that also requires a change in how we actually schedule the work and schedule our workforce accordingly as well. Now, the thing is here, when an organization faces a workforce shortage, there are typically 4 decisions that you have to make, okay? Let's look through what these actions are. The first is when you have a shortage, you can shut down a service or you can postpone growth. That actually alleviates the need for the workforce in a particular area. We saw this a lot in the hospitality industry. Bars were shutting down, hotels were shutting down, or shutting down certain areas of the bar or the hotel in order to cater for the business and maintain the business or continue the business in a smaller part. So that's one option. However, not all industries can do this. Hospitals cannot do this. If you're a public hospital, you still have to maintain a large degree of services, so it's very difficult. The second decision is to intensify talent recruitment, and this is the other reactive action. I can't get the staff I need. Let's go recruit more. Let's put out more ads. Let's go approach more recruitment agencies. Let's get more staff in. The problem with that is the staff just isn't there because there's a limited talent pool out there at the moment because of the macro conditions that I've just described. And so there's two other opportunities, and that is to realign your staffing and your skills to customer demand. And this is called capacity optimization. And the fourth opportunity is to actually improve retention. And that is to stop the bleeding of staff leaving your organization. Both option 3 and 4 are around optimizing your existing workforce. Option 3 and 4 are opportunities and actions within the realm of control. And moving forward, they're going to be critical for successful organizations to have a very good handle on this, particularly in a tight labor market. Typically, the reactive options 1 and 2 are out of your control to some degree, or certainly recruitment is within your realm of control. But as I said, it's very limited at the moment. And option 3 and 4 are typically where capability has not grown significantly, but this is the new area of opportunity for many business. That is optimizing your existing workforce. And we'll talk about that a little bit more. The reason why we don't do this well sometimes is because individual people managers are often challenged with doing so. Many do not have the time to actually collect or analyze data around the existing workforce. Often they have limited in-house HR support or limited in-house analytics capability or the skill set to actually understand what's going on with my workforce at a more detailed level, at a data-driven level. Often also your data is scattered in different disparate systems. You might have some of your people data in payroll, some of it's in your rostering system, some of it is in your finance system, some of it is through conversations that you actually haven't documented or synthesized or actually understood, particularly around how engaged is your team. What's their well-being actually like? What are these conversations all telling you? And have you hard-coded that in a systematic way to help you make some active decisions? The other challenge with this as well is that many teams, leaders, organizations actually have limited capability in strategic workforce planning. That is a different competency than what typical traditional HR is. And so all these factors can lead you to actually being data rich, but insight poor. And therefore, a lot of the value potential of your staff, your team, and so on is locked, as well as the ability to actually make any significant change or transformation. Now, why is data-driven insights really important? Because this is a competency that I believe is going to be fundamental to actually improving complex problems. Whether you have a small practice of 10, 20 people, or a large organization of several thousand people or tens of thousands of people, you have to get your head around this process. If you look at the pyramid here, let me just explain. Most of us have data, which is numbers, text, and images in all forms sitting all throughout our organization. This can also include verbal data, which is the interviews, the conversations, the water cooler conversations that you have in your organization. Then there's the next layer up, which is information. And that's the reports. That's the reports that you get in Excel. That's the reports you get in your PDF on your inbox that are telling you all sorts of information about your business performance, your financial performance, your wages cost, and so on. But knowledge, as you step up, is insight. And that is the insight around what is this information, what is this report actually telling me about the drivers and the root causes of the problems around my specific workforce, my specific type of workforce, whether that's a nurse, whether it's a construction worker, whether it's manufacturing, whether it's a financial advisor. What is it actually telling me? and what are the drivers behind some of the behaviors of leaving, staying, or customer demand, and what are the right actions that I need to put in place. This is the translation from information to knowledge. Now, wisdom, which is at higher layer, is when you actually have ongoing results in better talent attraction, better capacity optimization, better staff retention, and overall better return on investment or ROI. Okay. So if you're actually wanting to improve your business around those top layers around wisdom, you have to take the data that you have, the reporting that you have, the conversations that you have with your staff, your customers, your suppliers, understand, bring them all together and translate them into knowledge and wisdom in order to achieve results. Okay. This is occurring in your brains all the time as senior leaders, managers, and so on. But hard coding this to some degree is going to help you improve your business moving forward. Now, we're going to switch to a poll very quickly because one of the things I want to do is just understand from you, and this is the interactive part where you get to tell us your challenges. What are your top 2 biggest challenges right now? Okay, please vote, and in a second, Mark will actually turn on the poll. But firstly will be, is high staff turnover one of your biggest challenges, that you have many staff leaving voluntarily? 2, you can't find talent pools or recruitment agencies to help you with recruitment. 3, you can find the talent pools in the agencies, but you can't seem to attract the talent for some reason. 4, it's difficult to retain talent. You want to keep your high performance, and that's your high priority. There's that top talent. 5, you want to help your current staff achieve your full development potential, performance, and productivity, and that's your main goal. 6, you want to help your current staff capacity match that with the customer demand and timing. So you're not looking so much at recruitment and retention. It's more about the people that you have. How can I actually match up with customer demand? 7, you don't have internal HR resource. You're scarce on HR resource. You only have administrative HR. You don't have this strategic workforce advisor. And then 8, you need more support with an accuracy in your data reporting in HR, people analytics, for better decision making. Now, there's 8 options there. Please don't go through analysis by paralysis. Mark's going to turn on the voting function here and just select 2 of the options. So Mark, please go ahead. That's in the chat box right there on the right. Please select one of the 2 options. You've got 45 seconds for doing so. So this is a quick poll, and what we want to do is just select one of the options just to the right. At the end of this poll, I'll just reveal the results here just so you can get a gauge of where it is. I'm going to stop talking for a second just so you can read the options and do your voting. That is in the chat box on the right. Please tick your options. Bottom right. Hope you can all see that. Okay. The poll has ended. We'll see the results very shortly as they come up. And I'll just gradually move on to our next slide, because what we're going to talk about next, we've talked about some of the bigger picture trends, strategies, challenges, and we can see here just on the right, what's the biggest challenges organizations are having. Interestingly, it seems to be in the almost perfectly in the order of how they were laid out. So biggest challenge for most organizations, high staff turnover, many people leaving. Second biggest challenge is you can't find the talent pools or the recruitment agencies. That's very interesting. We'll come to that in a second. Third biggest challenge is E, or option 5. You want to help your staff achieve the full development potential, performance, and productivity. So that's really interesting. And that's often what we hear from organizations at the very beginning of the engagement that we have with them. But things change once they get educated on these 8-step workforce strategies. So let's go straight into them. Thank you very much, Mark. I appreciate that. So what are the strategies? So here's a nice little sequence here for you to follow, irrespective of whether you're small, medium, or large organizations. Here are the things that you need to do. And all of you have probably done it to some degree with varying levels of success. First step is lining up your workforce leadership team. We'll talk about what that's all about, and we'll go into a lot of detail in each one. Second is about defining and quantifying the actual problem that you have. Third step is about analyzing the key drivers and root causes. Fourth step, workforce planning and prioritization. Fifth, generating and implementing some action plans and solutions. Sorry, that's step 5. Step 6 is some scenario modeling and optimization. Now, this is an optional step. I would recommend this only for large organizations with many analysts, or small to medium organizations that are particularly sophisticated with data only. If you're a typical SME, you wouldn't do step 6. So it's only 7 steps. Step 7 is about monitoring and evaluating your workforce performance. And step 8 is about continuously adapting and improving these strategies. Let's go through them in more detail. By the way, you will get access to these slides. You will get access to these 8 steps. Now, the first step is about aligning your workforce leadership team. See, when you have a complex problem like this, it's really important that you build your team around the problem and get your stakeholders engaged. I'm constantly surprised of, whilst this might be a subconscious problem in many organizations, it's not yet strategically a topic of conversation that's structured in a well-governed manner, and not all the right representatives are in the table. It's really important to have your CEO, MD, or the practice owner or partners involved, obviously, CFO, COO, Chief of Operations, again, the head or director of manager of HR or people and culture is also a key representation on this team. The analysts that you have, or whether you have analysts or whether you play the role of an analyst within your organization, that's also a key person that's required. But also your key suppliers. Have you got your key suppliers on the table around this conversation? And also your key customers. Do you have representation from your key customers to discuss this issue, but also in particular, help you implement solutions moving forward? All these people need to be around the table on a regular basis. I recommend at least once a month talking about the workforce shortage issue and working through strategies. Part of the conversation, and again, this is quite a lot of text on this slide, as it did say, there's a lot of information here. It's really important to get clear on the problem statement. What's the problem that you're looking to solve? We need to clarify this, and we will clarify this in a second. Are you trying to solve a retention problem, a workforce shortage problem? Is it a problem with capacity optimization? What is the problem we're trying to solve? It's really important to get a clear problem statement. Scope, it's important to get this a quantification of the size of the problem. We'll go to that in step 2 as well. But that's, again, a key issue where we often find businesses don't really fully understand the cost of the problem. How does it affect specific segments or demographics of our workforce more than others? Do we have, particularly, for example, nurses? A significant portion of organizations have nurses between the age of 25 to 30, have a lot of childcare requirements. Do we understand the segments of our workforce, and do we understand the specific challenges and needs of that workforce? Secondly, have we benchmarked against the industry? Is this a sector-wide issue, a regional issue, or a local issue that's affecting us? Because the solutions that you implement can be slightly different or customized based on where you're at. Next, we look at the business model. How is this affecting margins financially? Is it affecting costs? Is it affecting revenue? Which financials aspect of our financial metrics is this workforce shortage affecting? Next, competitor intelligence. How are customers behaving? Have you looked at how your competitors are addressing these issues and what they are doing? Don't try to be exactly like your competitors, but often you can get ideas on how they are behaving in order for you to take some of the good ones as well. The duration. Do we expect this workforce shortage problem to be a short-term issue, medium-term issue, or long-term issue? This is very, very important to understand, because the solutions that you are going to invest in moving forward will depend on the timing, the cost, the capability investment is going to depend on your perception of the duration of the problem. Data and insights. Do we have critical data on the problem, and do we have data on the best available solutions in the market? Operational issues. What are the bottlenecks that we're currently seeing? Where are we needing to make more changes in how we do resource allocation, rostering, and scheduling, and so on? Forecasting. How do we adapt our capability in being more predictive in our analytics and doing better forecasting. One of the big downfalls of forecasting that we saw over the last few years is that largely these shortages were either forecast to some degree, but the pandemic made them a lot worse. So what we're not good at is forecasting short-term shocks to the system, and that's a capability that now many teams are starting to realize they need to do. IT systems, do we have the right IT systems in place to accommodate these changes? Are they flexible enough? Are they cost effective enough? Are they adaptable enough? And finally, how does the impact of these shortages affect our customers, our operations, and our supply chain for the next few months to years moving forward? Once you get a handle on all of that and you align your workforce leadership team around a lot of these issues, you've had the conversations, you've awakened, you've activated, you've got a governance process in place. One of the key things that we know is you need to define and quantify the real problem. You see, a shortage can be defined as the inability to obtain the sufficient volume or capacity of workload required by the organization, the department, the team, or any point in time. So it's that volume or capacity of workload. It's not necessarily purely about having enough people. It's about how you actually use those people as well. And so a workforce shortage is in reality a capacity shortage, but also a capability shortage. Okay, it's a combination of these two things. And some of the drivers and root cause of labor shortages can be, yes, an actual reduction in number of staff. This is obvious. You may have a reduction through these involuntary turnovers. You may have had major layoffs. You may have had firing decisions, restructures, and so on that have laid a significant number of people off. Those were decisions that you made or your teams have made. But you also may have had voluntary turnover. This is talent leaving on your own accord. And most of the CEOs and owners that I speak to don't want voluntary turnover, obviously, because that's the talent that they wanted to keep. In addition, you may have staff that have just had lower productivity. There's been low morale, significant amount of burnout and fatigue across the workforce that's been recognized, and people just can't work as hard as they have been over the last couple of years. There may be low availability of the workforce. It says sick leave, furloughs. A significant number of staff that were previously permanent working for you have now shifted to part-time or casuals as part of the gig economy. So they're not as available, and that's another cause of the shortage. You may not be able to recruit the roles as we talked about for the reasons we talked about. Leave is another factor on a workforce shortage. So think about annual leave, long service leave. But also one thing that's really interesting about leave that's over the last couple of years and a trend that's accumulated, some organizations have had a significant amount of accumulated leave loading over the last few years. There generally hasn't been anywhere to go for holiday. And so many people did not take their leave or want to take their leave and are now starting to take their leave. But for some organizations, particularly if you look at the balance sheet of some of the big banks or other large organizations, that leave loading is a very scary number that they're all starting to address from a governance perspective. One of the other root causes of labor shortage is actually self-imposed constraints, artificial constraints that actually no longer serve you. They may be outdated or redundant workforce policies, salary caps that you used to set, preset operational ratios like a wages to sales ratio that actually caps the amount that you can actually pay people, but they no longer serve your workforce right now. They no longer serve and actually affecting your bottom line and your revenue. And so it's often we find when we start working with teams and businesses that these preset conditions, they do not realize because they've been embedded in the behavior and the culture and the operations of the organization for so long, they're actually limiting growth without even realizing it. And so it's time to reevaluate those. But also there's that capability mismatch. Some of the workforce that you used to hire may not have the right skills to meet the current capacity or demand. And so there may be an opportunity to train and develop people to meet the new demands. But are you clear on what those real demands are? Have you hard-coded them? That is the issue. One of the big things to do, therefore, is to actually define and quantify the real problem. Turnover, when you have turnover, and most of you said staff are leaving, but have you actually quantified the cost of the problem? You see, turnover has tangible and intangible hidden costs. Every time you lose someone, there's a cost of hiring new replacements. The money that you spend on ads, recruiter fees, and so on can be very significant. We've got one client spend about $800,000 a year just on recruiter fees alone. It's an enormous amount of money, close to $1 million. There's the cost of temporary staff to cover a position. There's the cost of training new hires, the cost of lost productivity. When someone's about to leave, they often disengage. They may be only productive at about 50% as a result. And also, you have your own teams and yourselves, for example, involved in so much recruiting effort and interviews that it's taking time away from running the business. There's a loss of revenue when you lose staff as well, which is a very significant cost that's not factored in the calculations. And there's many other variables in quantifying turnover costs. One of the things that we do when we help organizations is, and with some of the tools that we have, such as the PME tool, is actually work out the staff costs and the clarity around the staff costs, which many systems already do. But if you look at that last line, that other cost, what is that hidden cost of turnover? Are you clear about that dollar? Are you clear about the impact of the dollar on the business? That's often a huge eye opener when organizations see that hidden cost and how much it's costing the business. It's very, very significant. And I'll talk about some case studies here. But that's where many organizations are bleeding, particularly the 42, 44% of you that have voted, you've got high turnover. You're bleeding very significantly. And it's really, really important for you to stop that bleeding as soon as possible. I used to be a doctor. I used to do that for people in real life, but now I'm doing it for businesses to stop the hemorrhage from occurring as well. Here's a couple of examples. So Eric here, and again, names have been de-identified, but Eric is from a financial wealth and advisory practice. He was holding back staff pay rises, and talent were leaving for competitive firms. Some of the root causes was that he was using historical profitability ratios and traditional budgeting as his wage cap. So he wasn't prepared to increase wages due to how the business was operating in the past. And so he was having difficulty recruiting new talent into the business, couldn't grow. Now, when he did some of this turnover analysis and actually understood the value of his private wealth advisors, he found that doing this calculation showed that when a private wealth advisor from his practice left, they took 60% of the client's revenue with them. So the account, 60% of that value of those accounts left with them, which is a huge number. And so when he did the work and we did that turnover analysis, he started to understand that the insights around the accurate value of staff. And he could have saved millions if he actually improved some of the salary and bonuses and so on that he was paying staff. And they're now taking a very different approach to determining salaries and bonuses and incentives based on these new calculations that were done. And this is a relatively small business, but very, very high value staff. Another example, Doug here runs a hospital in aged care, did not realize how costly the staff turnover problem was. And also in this particular case, not exactly understanding which specific staff segment, which areas turnover was occurring. It was clear that nurses were one of the big areas, but why were they leaving? What's the degree on which they were, the demographics of that particular cohort? And after understanding and doing some of the work and the analysis around some of the turnover costs, which he initially didn't believe, he started to learn exactly what those costs are, and that also that there was a shift in the workforce where before he was predominantly dealing with permanent staff, now realize many staff members in doing more accurate baselines of his staff demographic who had become part-timers and casuals. And so he started investing more in social bonding events, recognition events. You might call this the touchy-feely stuff, but it works. Leadership rounding, walk-arounds, one-on-one coffees. And some of these things were costing several $100s, but he could start to see that these new insights from doing this analysis were costing over $40,000 every time he loses a staff member. So what we had done with him, worked through a turnover calculator and actually calculated every single line item. And whilst he didn't believe his calculations, he did his own over a weekend. And I believe he may even be at this webinar here today because he is a CPA himself, went through every single line item, costed out the cost of every single item down to the $50. And once it added all up, it was about $40,000 every time he lost a staff member. And so he started to put the right actions in place here, and the bleeding has currently stopped. And so some of these are very, very powerful examples of what, when you do these steps, how they can work for you. The third step, as I talked about, is actually analyzing the drivers and root causes. I've shown you many examples so far, but it's really, really important to understand, is it a work health and safety issue? Is it a workload issue? Is it a well-being issue? Is it that staff are disengaged? But to map this all out and get really clear on what are some of the root causes behind turnover, behind the lack of retention. I'll let you just sit and look at this diagram for a second. Moving on. So many organizations aren't really clear on what are the root causes to address. Now, if you're about to take action, if you're about to put strategies in place in your planning and prioritization, your number one priority is to actually map your action plans to those specific drivers and root causes. This is really, really important because your actions are going to be in three big buckets, right? As I said, bucket one was about earlier shutting down your services. Now, let's assume that that's not an option because you want to grow your business. So then you've got a bucket of actions that you can do around talent recruitment, a bucket of actions around optimizing capacity, and a bucket of actions around retention. They may all overlap. It's very likely that some of them do overlap. But in terms of recruitment, I'm just going to pick on, here's a range of ideas on what you can do. As I said, you'll get the slides. But one of the big things that I notice is that many organizations, particularly SMEs, are actually not clear on your employee value proposition. You may be clear on your customer value proposition. So why do customers want to work with you? But why do employees clearly want to come and work with you? And that's a piece of exercise. That's a branding exercise. It's an exercise of inner self-awareness, but also around mapping your strategies based around what are you good at? What are you strong at? Why do people want to work with you? Are you clear on that? And are you making that explicit in your job ads? So many job ads are ineffective because the EVP hasn't been clearly communicated in the ad. In addition, really looking at flexible options, that's a big one over the last year. So what I'm seeing, best practices, flexi time, people being able to work at flexible times, flexible leave, so changing the leave structures, flexi location, being able to work more remotely as opposed to in office or hybrid roles, and then flexi scope as well, changing the scope of work. So it's no longer sort of the work that they used to do, but more work, some of the work that they want to do as well. Capacity optimization. This is the big piece. Option 3 and option 4 are the low-hanging fruit that many businesses completely miss out. And this is where significant value is. Because as I said, option 2, talent recruitment, that's the reactive option. But around capacity optimization, one of the big steps that people miss out is doing the supply and demand analysis. So really getting clear on what is the supply, what are the skill sets of my workforce, and what do customers actually want, what are they likely to want in the coming months? How do I actually adjust that? How do I roster that? How do I change my resource allocation to match up with that much more tighter so that we can actually improve profit, so we can improve revenue? This is a big one. Obviously, then there's digitizing processes and so on, also big. So many organizations are going to digital transformation specifically for this reason. But there are faster ways to do this as well. And then particularly, as I mentioned before, point 6 there, removing those artificial or self-imposed constraints. These are constraints that you've probably been living with, but you probably even don't realize they've been constraints on your business until somebody outside and somebody independent comes in and has a look at them and say, why are you doing it this way? This is something we've done. I think 100% of the time we found some constraints in the business that shouldn't be there, but have been there for the whole while. Finally, then retention is all around looking at many different aspects, but some of the big things around engagement surveys, experience surveys, well-being surveys. So really understand staff at a much better level, but also introducing leadership programs, well-being initiatives, flexible working options have been very, very strong in the retention space. The key is understanding what specific ones should I be doing. So it's really important. And step 5 is to actually generate some of those action plans and implement them. These can sit in many different categories, and you want to lay out a strategic plan, a workforce strategy, something similar to this at a high level that encapsulates a degree of needs assessment or needs analysis, clarifying your employee value proposition, improving your recruitment process, having stronger L&D, learning and development, your remuneration and benefits aspect, but also performance management. Significantly undervalued. Whilst we may set objectives and goals for our teams and staff, often we're undercooked in terms of providing the appropriate level of coaching and feedback to actually understand why aren't people achieving the objective. Not just shouting at people, not just penalizing people for not achieving the objective, but providing the right level of resource, emotional resource even, to help them through some of these development plans. These are missing. So it's important for you to lay some of these out and prioritize some of those actions as well. Now, here's an example. Susan, a retail organization, had a lot of staff that were feeling burnt out. Many talented staff were leaving, saying, I can't work here anymore. And some of their stores were suboptimal, declining sales revenue in certain stores. They put it up to the pandemic and so on. But there were things that they tried to do, and HR was spending all their time just spending it trying to recruit, put the job ads out there over and over again. Very little time to conduct proper exit interviews or even analyze some of the root causes for people leaving these stores. They assumed that they know, but they didn't really know. Once they started to understand the real reason for people leaving stores and the organization, they started to improve their exit interviews in order to prevent this in advance, or rather improving the exit interview process and understanding it helped them do it. They also started to improve the monitoring of leave, absenteeism, and staff well-being to help them closely manage individual staff to address issues before they became issues. Another organization here, Sarah and Jane, directors and managers in a large enterprise, they found that many staff were treating their organization as an initial training ground to grow their career and then find further development elsewhere. So many of the reasons people were saying was that I want further growth in my career. I don't want to be here anymore. This is a good training ground. But also the other challenge that they found was that they were only providing full-time work options, and they were also only using traditional methods of recruitment, such as advertising and agencies. All this was also compounded by the fact that when we started to understand the biggest problems, they didn't understand what their peers were doing. They didn't understand what their competitors were doing in this space and some of the flexible working arrangements that are out there. And they didn't understand what some of the best practices in recruitment and IT solutions in that space that could actually improve their experience. So after helping conduct this review, started to invest more in different development programs for their staff that actually fit in with some of their staff preferences and also help them upskill them, whilst also providing some flexible working options that were fit for purpose for their current workforce. They're also started to become more aware and procure some of the best fit recruitment solutions to help speed up their recruitment and onboarding efficiency. Step 6 was around scenario modeling. This is something that mostly larger organizations do, and I'm going to skip through that because it's more capacity for the larger organizations. But as we go into step 8, it's really important, and I apologize that this is a very rich presentation here. I did say that at the beginning, but this is because it's a complex problem and you do need to get very much more strategic and methodical around how you manage the problem. Really important to manage and evaluate that workforce performance, but particularly also that get a close handle on your turnover and retention rate, particularly as so many of you are saying that this is a big challenge. And I think if you really get into the depth of what's going on here, you realize you don't have just a problem with recruitment, you actually have a problem with how you deal with your current staff, and that's resulting in how you your challenges in recruitment. In terms of monitoring, many of us do use Excel reports, but there's significant value in real-time dashboards to get a handle on this much faster, particularly as this is a big business problem or your number one business problem. Why aren't you doing that? It's also important to have meaningful metrics. I've talked about turnover costs, but also breaking that down by staff type. Understand specifically which type of staff am I having the biggest problems with, but also start to get some lead indicators on disengagement. So engagement surveys, experience surveys, well-being surveys have become increasingly popular over the years, but many organizations don't know how to do it, or when they do those surveys, they don't know what the surveys are telling them, or if they do, what actions do I put in place to actually address them. Many people managers struggle with this because they weren't trained on these competencies. They were trained on the technical aspects of the business, not really people management. So this is where some of the challenges have occurred where we've helped with. It's really important then as you get more advanced to correlate those lead indicators with your lag indicators. So your business metrics, your revenue, your sales, and so on. As I said, we've seen organizations with declining sales ratio, sales revenues in their stores, in their business units. But where you see that disengagement correlate with that, this is where we pull all that data together and put specific measures or specific interventions that then help change the revenue and so on. Industry benchmarks are really important, looking at average wages and wage growth and so on. But it's also really interesting that in some cases, such as the Mercer salary benchmarking reports that have come out, they're starting to say, don't rely on averages because there's so many outliers at the moment because of the competitiveness of the market that whilst you may get averages in benchmarks, it's really important to treat every single recruit on a case-by-case basis to some degree, and also do your turnover analysis to understand what is the cost of lost revenue when you don't have this staff on a periodic basis. Step 8 is to continuously adapt and improve the strategies. Everything that we've just discussed should be part of your workforce planning, and that it should be in a regular governance area. But most of the organizations that I speak to, or many, this process tends to fall off when things get busy, or you think this may be a short-term problem that's going to go away in a few months once the borders ease. And that, my friends, I think might be the biggest mistakes in perception. Let me tell you why. Have a look here. Look at this data here on the unemployment rates, predicted unemployment rates. This is correlated between the IMF and also Statista. But if you look at 2022, which is where we are now, it's looking at about 4%. But if you look at the future years coming through, this will be a tight labor market for the next few years to come, if not this next 1 to 2 years. And so if you are going to help solve these workforce shortage issues to help grow your revenue and to be competitive, it's really important to look at investing time, dollars in your workforce capacity right now. We see this running through to Christmas. We all have to do more with less. Even Father Christmas has to do that. And so to summarize where we're at, and there's just a few more steps to talk about. First step is really around addressing the workforce leadership team, quantifying the problem. We talked about analyzing the root causes, planning and prioritization, generating some actions, a scenario modeling as an option for the larger organizations, evaluating performance, and continuous adaptation. I know we're running through with time. I'm going to skip this second poll here, but I do want to offer some free resources here before we go into questions. There is a white paper that we've written on this. So if you'd like, please feel free to SMS this phone number. My team's going to put that in the chat box as well as the email address. We do have a white paper that you can download for free, as well as a simple turnover calculator that's going to give you some high-level numbers that you can download as well. We are also offering a focused discovery session. This is exclusive to CPM, everyone on this webinar, and Mark's putting in some links right now around this. So please feel free to type in or email us with calculator, paper, or the focus session. Again, this is a free session. We will sit with you for a good half an hour at least, listen to some of your challenges and help you focus, because prioritization is one of the biggest challenges on this issue. That's the phone number. If Olivia or Mark can actually type that in as well as the email address, that'll be great for everyone on this webinar. One of the other things we're developing is a tool called the PME. This helps you automate everything I've just described to some degree. Particularly helps you do your turnover analytics to help you identify that cost of turnover, which is that big cost, providing new insights, helping you understand what are the drivers, and also helping you generate some of the actions and solutions to solve these challenges moving forward. I've talked a bit about that hidden cost of turnover, helping you work that out. The PME tool helps you do this, and it helps you do this at a very low cost, lower than the cost of an analyst, in fact, and helps you break down exactly where that's occurring as well, which is one of the biggest challenges it has. But the tool is also developing a actions and solutions digital advisor. So there's an algorithm that helps you work out what are the solutions that I put in place based on the challenges that are being identified in my root cause analysis. Some of this is automated by Energess and provided to you as part of the tool as well. So it's really addressing some of the workforce challenges of today and helping you fast track through that process at a lower cost. This is something I highly encourage you to look at. We've done a case study with one of our organizations with an early prototype. As I mentioned, he's here in the webinar today as well. He's a CPA himself. Is a CEO that helped us prototype the tool, that rated the tool 10 out of 10 in its early version. The tool helped to identify some new insights and priorities, 30% more new insights and some new priorities that he wasn't aware of before, improved efficiency of the planning process by about 90%, and also helped improve decision making and ROI by providing more evidence-based actions, a more comprehensive framework, and greater ROI and visibility on budgets. We're now targeting 5 to 10% capacity optimization through this prototype, and both HIMSS executive and employees felt much more reassured through the strategies that were deployed using this PME tool. So we're currently offering this tool just before we close off as to help you understand your workforce. It's got a built-in advanced turnover calculator, so you can actually beat your competitors at this game here, and also reduce the manual effort of doing this analysis, which we found through many years of working with organizations in this space. If you contact us in the next 7 days, we've got a 50% discount. This specifically for attendees on this webinar in partnership with the CPA, and the payback period on this tool is about 30 to 60 days. So please just, the email addresses are there. Please SMS us or send an email if you'd like to catch up. But if you want to stop the bleeding really quick for that 44% of you that have got that high turnover, I strongly encourage it, either one of those free sessions or having a conversation with us on this PME tool as well. Now, for the last few minutes, I do apologize, but you can send questions to us on the email address. We will respond, or you can reach out to us on the sessions there. But I'll take questions in the next few minutes as well, Mark. And so thank you very much everyone for your attention.
Yeah, thank you very much, Avi. I do have a couple of questions here. I suppose the first one I'll go with is touching on corporate social responsibility. Do you have any data on or any in your research around sort of the climate change or environmental damage and ethics of organizations as a reason for staff leaving? Has that seen any increase?
Yeah, a very, very good question. What we've seen is the strong drive towards ESG, environment, social, and governance policies, particularly in large multinational corporations, being a very strong policy driver. This used to be talk only, but now what we're seeing is that translation to action. And some organizations are starting to put significantly more policies and investing real money in some of these policies moving forward. So yes, I'm seeing, particularly around the millennial generation, a greater alignment with purpose, a greater alignment with, is our business really supporting the planet from that corporate social responsibility or social responsibility as such. And so certainly there's a trend driver, particularly amongst the younger generation of the population, to want to work for companies that are more purpose aligned and actually helping the planet in some way. But that ESG mandate is coming through in a very strong way as well.
Great, thank you. Overseas employee share schemes seem very popular, even in the SME space. Do you think that this is workable in Australia?
I don't see why not. I mean, there are lots of startups that even brand new business startups that actually have employee share schemes that they start to put in place, because one of the things that it does, it helps you retain your staff for longer. So it's very much a good strategy for as a long-term incentive to retain talent, particularly when you don't have a lot of cash. And so it's highly encouraged looking at it. But also bear in mind that in some cases, especially if you're a smaller business with just a few partners, these partnerships are like a marriage, and you're going to be in them for a lifetime. So you do want to actually go through a bit of a trial process to understand if your working relationship can be a good one. And I'd address that working relationship just as much as I'd address putting in place these long-term incentives as well. But I do encourage that. Yeah.
Oh, great. Well, I think we might leave questions for the moment as we are just on time. But thank you very much, Avi, for your excellent presentation today. I'll hope that everyone thought it was as informative as I did. So over the next 3 working days, all of you will receive an evaluation survey accompanied by the recording of this webinar along with the links and slides. We do really appreciate your feedback, as it's extremely valuable to CPA Australia, to each of the committees within the division on putting forward the most relevant topics for each of you. So thank you all yet again. Thank you again, Avi, and look forward to welcoming you all to another webinar soon. Thank you. Take care, everyone.
Thank you very much, Mark, and thank you everyone for being here. Bye-bye. Hope to hear from you soon.